It is time for our weekly market monitor who likes the small cap stocks. He says the extreme market volatility has created the most mispriced stocks he's seen in a decade. Joining us is Craig Hodges, CEO of Hodges Capital Management. Welcome back, Craig. Great to see you.
Thank you, Sue. Nice to be here. When
I was reading through the notes, you really do mean there's a lot of mispricing, in your opinion, in these stocks. So let's start with commercial metals. This is what you say is the most mispriced stock in the market today. Why?
Yeah, it's really, the company is hitting on all cylinders, probably having as much success as the company has ever had. At Hodges Capital, we followed the stock for at least 25 years. The stock's trading around $15. In 2007, they earned about $2.90 a share. The stock traded as high as almost $40. So almost the same earnings, and the stock's 70% lower. This is a company, it's a rebar manufacturer. They've got about over a 50%. They just made an acquisition that's going to make them a 50% player in the U.S. rebar market. Earnings are going up. This acquisition they've made is very, very accretive. I think even the company's baffled why the stock is trading like it is. So I think this is one of the most mispriced stocks I've seen in a long, long time.
You also like At Home, the home decor company. But as we've mentioned, I mean, this company has suffered along with the home builders and others involved in the housing market. So is this a bet that the housing market recovers or not?
Not really. This is a kind of a home decor superstore concept. Only have about 115, 120 stores. They're going to grow that to over 600. So it should easily grow 20, 25% over the next 5 years or so, but only trading about a 20 multiple. So that's a good risk-reward ratio. They're going to go into the hotter markets. They're very, very popular with the millennials. A good growth concept that I think has been also a stock down about, that's been cut in half, here in the last 4 or 5 months. So it's a good entry point on a good growth company where you're not paying crazy multiples.
And finally, Helmerich and Payne, I was really impressed with the dividend, 5.3%. Yeah. And you say they have consistently paid and raised the dividend for more than 45 years.
Yeah, one of the highest quality companies we know of at Hodges Capital have owned this stock for years. The energy markets, and they do land drilling services. They have flex rigs that are the most efficient rigs out there, land rigs. But, here's a company that has consistently performed in a very volatile business. And it is still volatile, but they've been able to ride out the storm. So like you mentioned, Sue, the 5.3% dividend, I think, is very, very safe. And the stock's also down about 30% just in the last 3 months. So another, I think, a real opportunity out there.
Craig, thank you. Have a great weekend. Craig Hodges with Hodges Capital Management. To read more about his stock picks, head to our website, nbr.com.